everyone, welcome to EduTap. So in today's session we are going to discuss a very important finance news article that is regarding the small finance banks that will be allowed to offer more forex products. Okay, so they will be converting or upgrading from authorized dealer 2 category to authorized dealer 1 category. Okay, so what is this authorized dealer categories and how the small finance banks will be upgrading from category 2 to category 1? All of this we are going to see in today's session, and this is a very important news article, though I am bringing it in a later sessions because the other news articles were regarding the important things that were catering for both RBI Grade B exam and NABARD Grade A exam. Okay, and as NABARD Grade A was near, so I was bringing those kind of news articles. This news article is more important for the RBI Grade B. Okay, so now I am bringing this. I hope you will be able to understand the whole news article. The criteria are very important. The understanding is very important, and I will not try to take much of your time. Okay, so now starting with, first of all, please subscribe to our YouTube channel if you are new to the channel, and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now starting with the news article, that is the small finance banks will be allowed to offer more foreign exchange products. So in a move to provide flexibility to the small finance banks so they can provide more services, the RBI has allowed the small finance banks which have completed 2 years of operation as a authorized dealer category 2 to upgrade to authorized dealer category 1. So this is the basic criteria that they have to follow, that when they have completed the 2 years as authorized dealer category 2, then they can convert to the authorized dealer. Then they can upgrade to authorized dealer category 1. Okay, and they have to comply with the other norms also. This is the basic norm that they have to follow. Okay, small finance bank will now be able to offer a wide range of foreign exchange products to their customers because the authorized dealer category 1 has more offers that they can do, the more services that they can provide. Okay, so now let's see that what is this authorized dealer categories and what are they. Okay, so the authorized dealers, first of all, they are the institutions that get the license from the RBI to deal in the foreign exchange, to buy and sell the foreign currencies. That is, they can buy the euros, they can buy the dollars, they can sell the rupees. Okay, so they can do all of this. They can buy and sell the foreign currencies, and they can deal in foreign exchange. So those are the authorized dealers, and these are the full-fledged money changers. Okay, full-fledged money changers, the name itself suggests that they can purchase the foreign exchange and they can sell the foreign exchange, and specifically, see, they are the small organizations, they are the small dealers. Okay, so they can exchange or they can purchase or sell the foreign exchange for only limited specific criteria, specific purposes. Okay, the specific purpose is for the private and business visits abroad. So if a person is visiting abroad, if a business group is visiting abroad, then if the foreign exchange has to be done, then that will be done. That can be done by the full-fledged money changers. Okay, it is possible for them to deal in the foreign exchange for this specific purpose. And who are the full-fledged money changers? They are the Department of Post, they are the urban cooperative banks, and the other full-fledged money changers. Okay, now coming to the authorized dealers. Okay, authorized dealers are the bigger categories. So starting with the authorized dealer category 3. So they are the select financial and other institutions that deal in the foreign exchange for their own purposes. Okay, so category 3, authorized dealers carry out specific foreign exchange transactions that are related to their own business or activities, related to their own business and categories. So they also have limited things that they can deal in foreign exchange. Okay, so this is transactions that is incidental to the foreign exchange activities undertaken by these institutions for their own purpose. Okay, now coming to the authorized dealer category 2, in which the SFBs, that is the small finance banks, also lie. So they can be the upgraded FFMCs, that is, they can be the upgraded full-fledged money changers that have been performing really well and that have been transferred from this to authorized dealer category 2. Okay, they can be cooperative banks, regional rural banks, and others, in which the small finance banks also come. Okay, so they have specified non-trade related current account transactions. So they can see current account transactions are which transactions that are happening currently, that happen on regular basis. So what happen on regular basis? The exports and imports happen on regular basis. The export and imports of the goods and services, as well as the payments of the interest payments, such kind of things, the visits, for the visits that you are dealing in the foreign exchange. So such kind of current account transactions are there. Now they are talking about non-trade related current account transactions. Non-trade means in which you are not exporting or importing the goods or services. So that is non-trade related current account transactions. So what are these non-trade related current account transactions? Here you can see the private visits, the remittances by the tour operators, travel agents, the business travel, the fee for participation in global conference, the film shooting, the medical treatment abroad, the overseas education, the remittance under educational ties. So you can read all of this in the PDF also if this is not clear. So what is happening, that they can, the category 2 can deal in the foreign exchange if it is related to non-trade related current account transactions. So their work is limited, their services are limited to the non-trade related current account transactions. Okay, current account transactions that happen on the regular basis. Regular basis, many of the people are going to visit, or many of the people from the other countries are coming to visit in India. Okay. So also all the activities permitted to the full-fledged money changes, that is also allowed to the category 2. Any other activity as decided by the Reserve Bank is also allowed to the category 2. So you have seen that the authorized dealer category 2 can trade in a lot of services. Okay, they can provide a lot of services. Still, when we will study the authorized dealer category 1, you will understand that the authorized dealer category 1 still provides more services. So they can be the commercial banks, they can be the state cooperative banks, they can be the urban cooperative banks, and they are the authorized dealer 1 category. All current account and all capital account transactions according to RBI directions, they can provide the services of dealing in the foreign exchange for all the current account transactions, all the capital account transactions. All the current account transactions means the export and import of the goods and services, all the services. For this also they can deal in the foreign exchange for any kind of this kind of service. Okay, as well as they can also do the capital account transaction. That is, if a person from our country want to invest in the other country, that is the capital transaction that is happening. So to provide the money, to provide the US dollars, to provide the euro to that person so that he can invest in the other country or she can invest in the other country. So that is the capital account transaction that is related to building the assets or decreasing the liabilities or something. Okay, so you want to do this investment in some other country. Okay, you have a factory there but you do not want it now. So for that also you can convert the money, you can deal in foreign exchange through the authorized dealer category 1. So any kind of capital account transaction, that is a one-time transaction usually, so that can also be done by the authorized dealer category 1. So they have more transactions that they can undertake, they have more services that they can provide, and now the SFBs can convert from authorized dealer category 2 to authorized dealer category 1. So let's see that now. So what are the eligibility norms for the small finance bank to become the authorized dealer category 1? So first of all, the bank should have completed at least 2 years of operations as the authorized dealer category 2, that is, they should have the experience in dealing within the foreign exchange. The bank should have been included in the second schedule of the RBI Act 1934. So they should be included in the second schedule, that they should be a scheduled bank, because all the banks that come under the second schedule are called the scheduled bank. Okay, it should have a minimum net worth of 500 rupees crore. So it should have a minimum base. Okay, its CRAR, that is the capital adjusted ratio, capital to risk weighted ratio, that should not be less than 15%. Okay, that is the risk that they are gaining, the risk that they are getting involved in by providing the loans. So they should have enough capital with themselves to deal with that risk. Okay, I have told you a lot of times what the CRAR is. It is also known as the capital asset ratio. Okay, CAR. The net NPAs, the non-performing assets of the bank should not exceed 6% during previous 4 quarters. Okay, so in the previous 4 quarters, the net NPAs should not have exceeded 6%. It should have made profit in the preceding 2 years. It should not have defaulted in maintenance of CRR, SLR during previous 2 years. Okay, so CRR is cash reserve ratio, SLR is statutory liquidity ratio. So there is a percentage of SLR that the banks have to keep with it themselves, and the CRR they have to keep with the RBI. So they should have not defaulted in any of these ratios in the previous 2 years. It should have sound internal control system, and it should not have any major regulatory and supervisory concerns as per the RBI. So these are the basic norms that they have to follow. If they follow these norms and they send the application to RBI, then the RBI will surely accept it. Okay. So they should follow these criteria to become the authorized dealer category 1, to provide more services to the customers, to have a income source. Okay, because becoming authorized dealer category 1, why a small finance bank will want to become authorized dealer category 1? Because it is more profitable. Okay. So now coming to additional information regarding the small finance bank, though I know that most of the students of would already know that, but let's have a brief revision kind of thing regarding the small finance bank. So they are the small banks that are set up specially to provide the services to the unbanked areas that do not have many banks, that do not have many banking services, like the rural areas. Okay, so their basic function is basic banking activities they provide, like the acceptance of deposits, like the lending to the unserved and underserved areas, the sections, like the small business units, the small and marginal farmers, which do not get the loans from the big banks, from the big commercial banks, or there is much documentation that is needed there. So they can get the loans, they can do the deposits to the small finance bank. Okay, the micro and small industries and the unorganized sector entities. So the small finance bank is specially for these units. The minimum paid up voting equity, or we can say the minimum capital that they should have during the start of the business, should be rupees 200 crore. So they should have at least this much of the base to start the business. Okay, as a small finance bank. The total priority sector lending that they should be doing, because they are specifically for these unserved or underserved areas. They are especially working for the unserved or underserved areas. So their total priority sector lending to the weaker sections, to the farmers and etc., it should be 75% of their adjusted net bank credit. Okay, from the net bank credit, their 75% of the credit should be going to the weaker section or to the priority sectors. Okay, the priority sectors include the small and marginal farmers, the agriculture sector, the MSMEs also, micro and small businesses also, and the weaker sections. Okay, so now next is, in view of the inherent risk of the small finance bank, it shall be required to maintain a minimum capital adequacy ratio. It was capital adequacy ratio, not capital asset ratio. Okay, it was capital adequacy ratio. They should maintain 15%, or the CRAR, that is the capital to risk weighted assets, they should maintain 15%. Okay, CR and the CRAR, they are both the same thing, that is maintaining the adequate capital for the risk that the bank is taking by giving the loan, because if you are giving the loan, it might not come back. So it is a risk that you are taking, and so you have to maintain a capital base, so that if that risk explodes, then at least you have the minimum capital to take care of that situation. Okay, of that distress situation. So that is the capital adequacy ratio, or the capital to risk weighted asset ratio, to maintain the enough capital. Okay, on a continuous basis they have to maintain 15% of the CAR or the CRAR, both are the same things. Okay, so this is for the small finance bank basic details. Now coming to the question, this is the first question, that is a very easy question that you have to tell. This is the second question, that is, in the previous 4 quarters, how much net NPAs minimum, like below what the net NPAs should be. So this was all. Thank you very much. I hope you have learned something new, and if you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.